All right, let's jump into things. So where we at? Just past 10, so 10:06 on the 7th of March. Just checking. Yep, headphones working. Beautiful. Look, I'll start off with Aussie. A little bit different there. So been sort of hammering on the sort of gold and that recently, but we had a couple of things play out pretty much perfectly to plan yesterday. So we were sort of coming into this area, and I was just like, look, you know what I mean? This is where we thought the sellers were going to be. Well, and bang, as you can see, sellers were here, and what they do, they were there again, and they showed up again on that little sort of kick up last night. But main sort of thing is really just this box that we were kind of looking for. We were just looking for this kind of little area, and we're like, look, you know what? If we get a trade, if we get a rejection through here, then we're looking back down to the bottom side here, and as you can see, pretty much went perfectly to plan. And this is because we sort of look at what the price action has been previously as it came up through this area. This was a very smooth down, more or less, you know, a couple of ups and downs and that, but more or less smooth move up here. Sideways congestion at this area. This is because the market's sort of going, yep, look, I'll buy it here, I'll sell it here, I'll buy it, sell it. And as I said, these sort of consolidations typically favor the direction in which they sort of came. So as you can see previously, we were selling down, congestion, consolidation, whatever you want to call it, same thing, and then bang, continuation down that move. So it does favor the idea that moving into this congestion, into this sort of area this time, that we could be seeing a further move to the top side here. We are sort of coming into some pretty sort of heavy resistance areas up above here. You know, the 70s were a bit of an issue in that we had, and if we go back, it was the top of this little area on the way down. So that would be sort of next sort of little area to sort of aim for should we get a bit of a break of this little sort of consolidation period here. Um, but yeah, sort of certainly up above that, then you're really looking at sort of major breakout levels, which are, you know, realistically this 64.20s kind of area. I think we got within a couple of points, 8 to 16, so within 8 points or so of that sort of area for major breakouts in that. And of course, you know, that's basically if you just zoom out onto this lot here, you can see that, you know, this would be your big sort of like, you know, last time resistance. I mean, we have put in a sort of bit of a sweep, sort of a higher high, lower low, but now you can see, obviously the buyers were down here, they've stepped up their bid here. So, you know, whereas before we were sort of chopping both sides here, like, you know, we were making a lower low, then we made a higher high, then we made a lower low, then a higher high. Like this is very much just like chop, chop, chop. This is typical almost sort of like what you see of gold when it's trying to sort of clear the book, so to speak, in that, and sort of like, you know, it's tell you if you're trying to get long, well, you stopped out. All right, it's gone short, close down here. Try to get short, bang, you stopped out. All right, now we'll go back to the longs, bang, you stopped out, and it just bends your mind. And this is what I say about a lot of these sort of things that sort of like it'll ruin you financially and it'll ruin you mentally before you before it actually moves. And typically, this is a lot to do with sort of like oil and gold, these kind of things as well. But it's some of these rules are applicable pretty much across the market. So that is the sort of breakout area because this time we've got a higher low, and that to back it up, we'd also have a higher high. I mean, technically, we actually have it through this area because this is your high, that's your high, that's your low, that's your low. So we are moving in this direction. So the sort of risk is more to the sort of top side to sort of pop out here. But in saying that, you know, we are still, if we zoom even further out of that, we are still in this sort of bearishy kind of momentum. You'd want to kind of sort of really, in my opinion, see it above 64.50. Getting up here is nice, getting above this most recent high. It's a bit hard to see with all these bits on the chart here. Getting above this most recent high, the 64 area is great. But really, there's a bit of a zone over here, which you can see the market tried to hold. If we get the drawings back for a second, you know, these kind of areas through here, they're the kind of areas you want to see the market sort of get above because tried to hold it a couple of times here, sold down. This level, obviously, bang down here. So look, it's going to be hard work. I mean, Aussie, I was saying to the mate last night and that sort of like, because I fucking took some pretty big hits in that through here because I tried to be a little bit clever and sort of hold on to a swing, which continued down, down, down. So it wasn't my normal sort of intraday trading that I do. I was trying to sort of like, you know, capture a bigger move. And we went from yearly highs to 5-year lows in 3 months. That underlyingly speaks volumes about what the hell's going on. So you can tell that sort of like, there's going to be people that tried to sort of catch these swings like I did. I, got stopped out, took some hits and that, yada, yada. But should you get back up into these areas, I mean, we're not even past the 38% yet. There's going to be some selling pressure, which is going to sort of come into it. So it's not going to be an easy trip back up. I think this was the easy trip down, and I think it's just going to be stairs on the way back up kind of thing. If we look back previously, I mean, some of these recoveries have been quite nice, haven't they? So, yeah, look, we'll see how we go, but certainly US dollar is under a lot of pressure at the moment, but Aussie has not been reacting accordingly. I think the elections were just here, so you can tell just by the price action and that, but if you look at the date down the bottom there as well, November 7th or 6th, that was when the elections were. You know what I mean? I'll get to DXY in a moment, but we're just kissing on the gap from the elections. And as you can see, Aussie has, from the election, I'll just see, I know with all these charts, uh, just got back 50%. Technically, at the moment, it's underneath 50, but kissed up around 50% of that election move, or post-election move, to get back there, while, DXY is back up over here. So what that sort of tells you in that, because I obviously sort of cover a lot of DXY and I trade Aussie a lot with it, is that it's not necessarily because Aussie's obviously not part of DXY, but you can tell how is the market reacting to US dollar broadly, and how is it treating Aussie in relation to that. And I think that's sort of like, where you can use DXY, well, not where, what I think is that is how you can use DXY, sort of like for Aussie, because you could tell that sort of like, all things given, the market is dumping off US dollar, across the board. But even in this scenario, while they're sort of selling that off, they're still not buying Aussie. It's not a one-to-one. So it shows that sort of like, what I mean, even with the right conditions, i.e. they're selling off US dollar, they're still not buying Aussie. They're buying euro, they're buying pound, they're buying yen, these kind of things. So, it just sort of means that Aussie is still vulnerable in that sense, because if they were like, oh, look, it's all good, let's buy Aussie, because Aussie's good, like because the Aussie dollar's got high demand, opposed to it just running off a weak US dollar, then excuse me, then we should be back up above 64, 65 cents at least. But we're basically only moving up just on proxy flow of US dollar being sold. So you've got the two parts, well, three parts for it all, but they're selling off US dollar, that's up for us. They're not really buying Aussie. So it's not great for us. And China's a little bit stronger. Bang. So the three parts that are going to move Aussie are these lots here. What you need to find is this part here. You need them to sort of go, hey, you know what? Aussie is actually sort of worth buying itself. Plus we're selling off US dollar. Plus China's recovering a little bit. This middle part, well, middle part here, but this part that I'm talking about now with Aussie dollar actually sort of being bought up and being in demand, that's the risk side of it all. And the reason that this isn't getting bought up at the moment is because equity markets are getting absolutely trounced. Because we've got copper moving up, which is a good one for Aussie. Metals are like all metals are kind of near their highs. Well, gold is, and silver's obviously sort of doing its bit at the moment. So those things are moving forward. Equities are getting absolutely trounced. And I think that is weighing on Aussie because Aussie is a risk asset. So should we see equities pump up? Should we see US dollar continue to be sold off? Should we see sort of the yuan strengthen? That's your secret sauce for the Aussie to get back up to 64, 65, 66 cents. Above 64 actually. If you get these three here, that's Aussie's definitely going to be going higher there. So I think that's a good sort of little barometer for how we can sort of look at Aussie each week and each session. Whether we've got those three ticks going in the right direction. If so, then we can expect a larger kind of move with it all. All right, so if we actually sort of look at where we're at, as I said, look, smaller time frame, consolidating near the highs here, it does favor a move to the top. This could be seen as a little bit of a flag area, And you know what I mean? If we do get, we got NFP tonight, so I'm not expecting a great deal of movement prior to this. But if we take this last leg and we move it up through here, that does give you a pretty good little move back up to test the highs over here. So as I said yesterday, I think a close above 50s, I think will be a nice one to signal. Yeah, there's a couple of zones through here which are going to sort of create a bit of sort of back and forth kind of little shorter targets. But should we get a break and a close above 50, I think is a good chance for us to have another big leg moving to the top side over here for Aussie. We'll have to see how this one plays out. But as I said, like DXY is coming into some pretty crucial supports, which does make you think that if they're not buying Aussie, given that whole spiel I just gave a second ago, if they're not buying Aussie even when they're selling the US dollar, or when they buy the US dollar and they're still not buying Aussie, that's a double prong for us to be going bang back down and sort of looking for these lower levels. So we can sort of just see where we're at now. Update this one a little bit for this last little move through here, just holding up in the 23% at the moment. So look, it is still bullish in the sense of this sort of move through here, bearish in this kind of medium term move, because really this is a bounce up here, but you want to see this continue and put in a higher high. If you roll over here now, if they roll over and come back down here, then obviously you're targeting these lower areas, the sort of mid 62s again, but it's failed to put in a new high. And now you're testing to see, are they going to put in a new low? And we just roll over and come down a little bit further. Look, I am in the camp of probably moving up a little bit here, but at the same time, you got to consider both sides of the coin. And with DXY potentially seeing some sort of rally if it does hold this zone, you could put a little bit of pressure on Aussie, but I think we do have a little bit of upside, and a close above 50 on a 4 hour particularly will give me a bit more confidence in that move. All right. All right. Let's move along. Speaking of DXY, so we're coming right down into this sort of gap area here. So this was, as I said, election gap, which we've been targeting all this time. You can see how long ago this was. This was the price target that I was like, oh, look, if we break this little channel through here, boom, boom, boom. This was way back when. And look, it goes right up all the way over there. Actually, it didn't go as high as I sort of thought, but this was a little head and shoulders. That's right, why we were sort of looking at this back down to that election gap. Anyway, so that is obviously sort of what we're seeing with DXY on this chart. Let's use the one that we have been using. So it's right down into this zone here, as you can see. This is the election gap. Is this little point here, down to this low, where we at actually, sorry. This one doesn't, it's just the election gap down here. 103.70 on this one here. Odd, because they've got different gaps on the two charts. But we are sort of seeing it sort of pop down into these lower levels here, and whether this is just sort of sort of US market. Sorry, I got distracted there, and I was looking at the charts. DXY seems to be online early today. Very odd sort of thing, because this normally comes online a little bit later. Maybe I'm just imagining things. 10:13. So 2 seconds. Yeah, around 10 o'clock it was still sort of moving a little bit. Anyway, whatever. Back to the actual chart. Something we could use. Uh, so yeah, obviously getting smashed, coming down here. Let's drag this one through because this will be something we can use as early barometer for this to be potentially a rounded bottom, sort of moving up through here. But sorry, I lost my train of thought. Here we go. Okay, so yeah, DXY coming down. We're in that election gap area. So whether this area here is more sort of just like support buyers, like as I said, we've got a little buy zone here because we've seen the price action, we've seen the buys here, obviously on the way up. This is why we have this thing sort of marked out. This is that little zone through here that we can sort of then go, okay, look, this is a little launch pad for them to move back up. As you can see, this one was through here. Is this going to hold? is this going to be the section where, people are either sort of taking profit and we see, obviously just as they sell their other positions, we see, US dollar come back up, or is this just going to carve right? 1 second. All right, back and just taking some phone calls. All right, so yeah, look, we're coming back into this area. I think this, look, I'm a little bit all over the shop with these DXY sort of charts at the moment. This, to me, I thought was where the gap kind of was, but it seems like a smaller one through this one. Anyway, regardless of it all, we're down into that gap area. Um, it's a plausible sort of idea that people will be taking profit, particularly after such a big smackdown. It's been such a one-way trade this week. I mean, each day I've been moving the fib down to see how strong any sort of potential buy-up is, and you haven't seen anything through the whole week. This is an interesting way to sort of use because I know sort of people are very much like, oh, your fibs, you use everything, got the top and the bottom. But you know what I mean? It actually can be used intra sort of move to determine how big or how strong the break could be potentially with the next low taken out. Because if you could see like a little bounce and it's only sort of come like, for instance, at one point this was the low, it only got to the 23%, and then it took out the low, well, you know that the sellers are very hungry to keep pushing this down, down, down. Whereas if you see this sort of bounce and we come right back up over here, well, obviously that's a little bit of a weakening of the sellers at that sort of point. But anyway, we keep sort of updating it. We have a look down here, so we could say sort of like where could these bounces come to? Should they sort of try to sort of squeeze it, or should we see a little bit of profit taking? Where are the sellers going to go? Nah, that's enough, and we're going to sort of lock this. We're going to sort of try and push this back down again because with such a big sell down like this, it's hard to sort of see one number unless it's an outstanding sort of number with NFP to justify this thing moving all the way back up. We've seen a mix of data this week. We've seen positive data and weak data for US dollar. It's both resulted in the same thing: sell off. Bad data, sell off straight away. Good data, buy for 2 seconds, then sell it off soon after. So yeah, it's interesting. I think we're expecting a slight tick up, 150,000 or so. May as well have a look at the news while we're at this. Um, yeah, yeah. 159,000 expected, up from 143. So, coming into 200, 220, some sort of outstanding blowout number. Well, you could see a little bit of a move and a push up. Unemployment numbers, for a US dollar strength position, you want to see this remaining low. And if you sort of play these things out, like, if flip the other side of it all, if unemployment is going up and job numbers are down, that's a sick kind of scenario, as in sick, unhealthy kind of scenario. And you got to play it out. Well, what would the response from the Fed be when you're seeing unemployment going up and less jobs being created? Well, economic conditions are probably a little bit tough and tight, which leads in the direction of more towards recession, which means that they would have to do something, which would be obviously give a helping hand. Helping hand by this would be lowering rates sooner rather than later. And that's why you would sort of see US dollar sell off should the unemployment rate go up and sort of the employment numbers go down. The inverse to that, if we get a strong number here and unemployment stays at 4%, well, it obviously sort of shows that, hey, things are tough, that's fine, but you know what, we've still got inflation in the background, which is, on to 4 months of increases, albeit small, 4 months of tick up. So inflation is still something we don't want to get out of hand. The unemployment numbers are low, not too bad. Still employing people, can't be that tough because you don't employ people when you're worried about paying next month's bills. Maybe we sort of hold for a little bit longer. We see what happens. That'll sort of help sort of keep a lid on inflation and see what the numbers come out next month. And if we see that, then we'll see US dollar move up to the top side. So that's pretty much sort of how you can expect NFP to sort of play out in relation to the US dollar. Of course, it's 12:30 on a Friday night, which is a little bit tough, but that's the game. It's the life we choose. So anyway, point is back to the charts here. DXY has been absolutely trounced. Should it sort of get that sort of scenario with the sort of lower unemployment and ticking up with a higher employment number, maybe we see a little bit of a bounce up to some of these levels. This has been a pretty quick move down. It could see a fairly decent move back up. But as I said, I think that the fact that this has been sold off so hard, this wasn't sold off just in preparation for NFP. This is a shifting in people's books and landscape outlook on a larger sort of scale. So any sort of move up through here, look, it's oversold, tipping up, could be just profit taking technical correction. But I imagine anything to be moved up into these levels to be sold into, like this. And I do think that this support area, as a support area, is destined to get a pop through. Move this thing. A little bit of OCD, but I hate the extra move like that. I think sort of, a technical correction could be due. Look, it could only just come to here. It could come back up to here. And this is the point with the fib as well. If you come to here and then you start to move back down, like I showed before, if you've got that, at one point this was the low. It only got up to the 23%, which is the 23% of that move at that point. Bang, it broke through. A lot more to go. Same sort of thing here. If this only gets up to the 23% and then starts to move down and tackle the lows and breaks through, we've got a lot more to go down to that 101 area. So it's just something to keep in mind there, but certainly US dollar getting absolutely smacked at the moment. And as I said, it's a bit interesting because it's also equities are getting smacked as well. So, it's not like, oh, they're selling off equities, buying US dollar. They're buying the euro. That's what they're doing. Euro's absolutely been pumping. I mean, have a look at the euro. That's a monster trade, even against the Aussie. Monster. Like, that is just, you know what I mean? Pretty much one straight direction. 5%. How long has that been? 2 weeks, and it's gone 4.6%. That is just insane. So they are really, buying the euro up all over the board, very much against Aussie as well. And this goes to show when you look at these kind of things here that, you know what I mean, even though selling US dollar against the euro, they're certainly buying the euro very strongly against the Aussie dollar. There's no sort of strength in the Aussie to combat that move at all. It's almost an identical chart to what you're seeing with the US dollar at the moment. So Aussie still vulnerable and still very weak. All right, and on to silver. So silver played out beautifully yesterday. Look, we had this inverted head and shoulders that we called out the other day. Got the nice break retest, couple of little shakes and that. This is where we were at yesterday. And this is a perfect example of how I sort of trade with stuff. You could buy, like I was buying silver through this period here. I bought it on the breakthrough here. But I'm in, out, in, out, in, out, in, out. Yesterday it was sitting around here. I was like, look, this is the plan. Come back down to these levels, the 30s and the 40s, and then move up to sort of target this price target just up here, which would be that inverted head and shoulders completion of measured move there. The measured move, geez, my words are all over the place. Maybe I need another coffee. But we are certainly pushing right up towards that price target at the moment. So look, things are looking a little bit better for the metals. Certainly it's been a nice little comeback here. We have seen obviously some pretty strong selling from these points down over here. So I think any sort of move up to 33 is going to find a little bit of a pushback. But still that's another sort of 40 points or so, 50 points up from where we are now. Plus it sort of goes in to show, if we look at this as the actual move through here, back to the 50%. So it's not like I've been going on about the fibs. Back to the 50%. It's not sort of super bullish. I mean, it's not like we came back to the 23 and now we're sort of going through. So there is some little question marks with the fact that it was allowed to go back to the 50, but it's stopped out, flushed out all these people along here, and then reloaded and bang, came back through here. So look, I think it's definitely going to be a little bit of trouble, a little bit of effort to break through these levels. But of course, 33.50, if we drag this one back as the bottom of this range that we were dealing with sort of back in where was this? Back in October. So yeah, you can see that this was like they tried to hold, let it go. Bang, as soon as we kissed it, bang, they sold down into it. If this comes back, reloads, and then pushes through, then look, you're looking back up around those 34.50s. Like it's a pretty smooth little cut through this area here as well. So certainly some potential upside for silver here. RSI's on the daily here, so set to support a move should it want to break higher here as well. I think a daily close above 33, and you're looking up, so yeah, closer to sort of 34, 34.50 on a daily close above 33. So today will be an interesting day to sort of see, what do they do with that US dollar? Do they sort of sell it off? Do they sort of buy it up and then sell it off, or do they buy it up and then just try and hold it? This could sort of just lead to a little bit of a and a push back down to these 32 levels again, sort of considering both sides of the coin. But yeah, certainly this pullback was very low. I mean, you can see where I thought buys were for a second held, buys here for a second held, bang, and just kept chopping through them all. So yeah, that's going to be interesting. But I think yeah, 33 daily close above 33 is what you want to see for a little bit of a continuation on a larger scale here. All right, and on the copper, and copper again, this is something that charted beautifully yesterday, and this is what I was saying. It all felt like it needed a breather. So this is the area that I put in. So I marked these in yesterday and I said, look, let's see what happens because obviously this is the move here. We expected a pullback, we got it, and bang, popped through and actually put in a new high in this move. Sorry, in this whole little area, yeah, on this way back up through here. So interesting sort of thing with this is, as I said, I was like, okay, technically this is your bigger zone here, and this would be your retest. This is on a 1 hour, so say it's on a 4 hour here. This is your zone through here, and this is what I was saying, sort of like, in the past, I've sort of gone, okay, look, you put it down here, you miss the entry, and move up. I didn't take this trade because I wanted to see how it would react at the first chance being the top wick over here. And as you can see, it came down the second wick top right here, but within very small margin there, and bang, it exploded back up here. So to me, that says it's very bullish. You know what I mean? They're not sort of waiting, oh, let me get a good price. They're like, nah, the second that these guys were shorting and it's just gone through, well, they've got a chance to get out, bang, they're out. The people are sort of like, to me, it's anticipating a move much higher. In the short term, I'm going to look for a close. Whoops. Consolidating the highs here. And look for a little close outside this breakout box. I think should give us in because as you can see, it's tested to go out, they've sold it. Test down here, they've bought it. Test out here, they've sold it. That's why you ignore the wicks a little bit, make it a little bit bigger, give yourself a little bit of leeway. But a close outside this box, I think should give us our next direction. But the fact that this came back here and the first chance they had it and they whipped it straight back up, I think to me is a very sort of bullish sort of sign. So if this thing goes out the top and right over here, I'll be writing that one into the rule book for sure. All right, and finish off with China and the yuan. So as you can see, really sort of just hanging around here. As we know, China likes to grind. It seems to be finding itself a little range down the bottom here. It's the top side of this previous sort of falling resistance. So, it's interesting that it is holding around here, but really, as you can see, this is a major zone that we've had sort of marked out here for quite some time coming down through these areas here. You can see it was a weekly zone over here, and this is what I reckon will be a big, significant break should it come down underneath here. Underneath this zone here, yes, there's a couple of littler zones moving through here, but price target for me on this is this big rising support, which you need to get onto almost a daily or a weekly to be able to see. But this is the bigger sort of large sort of triangle that we're potentially looking at should this sort of break. And I think sort of like, as I said, underneath 720, I think we're going to see a fairly decent little move down, at least 710, where we've got that horizontal, depending on the speed it comes down, of course. As we know, China likes to grind a little bit. But as it sort of moves down here, I'd be looking around this kind of like, a confluence of a horizontal with this big rising support through here. So a little way to go, 724 at the moment, but certainly I think there's room for a good move should this horizontal be taken out, and that'll be sort of a bit more of a catalyst for probably Aussie doing a little bit better, but again, broad sort of sense of US dollar being sold off, and it's not DXY just moving because euro is being bought up so much. It's more just sort of like actual full, like it's extending to Asia in this point when we're seeing a breakdown against the yuan as well. All right, and beautiful. So that's pretty much it there through Asia today. We've got a bit of China data sort of coming out. Okay, big tick up expected in the trade balance there. Actually, yeah, big jump ups there. So we'll watch these ones. I was about to say these little things here. I'm sure they mean they're tentative. So of course we don't know when they're coming out. They'll just drop at some sort of point with it all. Apart from that, nothing else through Asia. And then we've got Euro fairly quiet, but the big one we're looking for is the NFP tonight. To sort of see how these sort of numbers come out and affect the market. All right, that's it from me.